Test. 1, 2, 3. Test. 1, 2, 3. All right, guys. Had a lot of questions about this chart today. PPSI. we did 320 million today, and I kept telling you guys, hey, in the beginning, there's no dilution, there's no overhead, right? And so the reason I was telling you that is because when you have supply and demand imbalance and you can't increase the supply, what's going to happen? I remember the float 7-8 million shares, and I said, hey guys, this has no overhead. I've done a training on overhead, and this is it right here. This is my PowerPoint that I did on it. If I need to do it again, I can. But all overhead is it's a way that they can dilute, which means increase the supply. So PPSI, look at the first, we're on 3-minute candles. Let's go to 5 minutes. Look at the first 5-minute candle. Can you see up at the top how much volume was done? In the first 5 minutes, there was 9.5 million volume. What is the float? Remember the float? You see the shares down here is 8 million. I think the float was around 7.5 million. And so what does that tell you? In the first 5 minutes, the entire float was rotated. So every single person that bought right here is a brand new owner. Okay, now let's look at the next one. 8 million. So the float was rotated once again. Now these float rotation plays, they're very simple. If you cannot dilute and you are rotating float, the only thing that you have to keep track of is volume. If volume continues and you continue to rotate float, you will continue to go up. But eventually what happens is you get so high, people become scared of buying because you're so extended, right? So here you said 15.5 million. So how many times does the float rotate in just this one candle? Twice. Now, the other play that I talk about when they're trying to get out of the baby shelf rule, what happens is the company, this is technically illegal, but it's done all the time. Savvy Management is one who does it all the time. Basically, they will lock the float. So let's say they wanted to push this to 20. Well, Savvy Management would buy, 5 million and leave the other 3 million for us. And they would sell into the pops and then buy up the dips. They would absorb on the dips. Today, I don't think this had anything to do with an algorithm, with a company. I think it was all 100% retail. And the reason that is that's just the way it looked on the tape. I couldn't find big soakers or big sellers. But what happened was there was no form of dilution. Again, right here, there was not an ATM. There was not warrants. There was no registration that could be offered. So how can the company dilute? They can't. They can't increase the supply. So the demand keeps going. Now you get up here and you get an $11.8 million candle, 11.8 million volume candle. And this is where we started shorting in my short room. We could have easily been trapped because it is such a low float, right? Now, the thing that I was telling you about that I wanted to train you on Friday was a common tactic for people, for big traders that are, I won't say stuck in the trade, but still have large positions in the trade, is they will hold the price up and they will have one more liquidity event to try to unload their shares. And it usually happens around this time. Sometimes it can be 14:30, 14, but you can see here, right here, we were actually, during this period, we were debating whether they were going to be able to push it up here or not. We didn't know. And our target was 7:30. And I think I posted that on the tweet. Let me see if I can pull it up. We said 7:30 is coming. I just don't know if it's going to be in this let me see if I can find. Sorry, let's see. I have to find it. But in our Discord room, we said 7:30 is coming. It's either going to be this push or the next. And sure enough, there it was, right here on this candle. And this was the deciding factor. If they were going to hold it and push higher, it would have been right here, right? We broke new highs for right here. You know what I mean? A higher high, not high of day. We broke new highs and they dumped into it. So do you see this candle right here and right here, these two candles, and then throw in this third candle? So you've got basically 3 million, 4 million, and another 2.5 million, right? So let's say this is 5 and 3, so that's 9 million. So in these three candles, the entire float was traded. Guess what that was? That was them dumping the rest of their shares. So this is what you look for. If you remember on my other training videos, I said look for 230 because they're going to start dumping. And unless it's a high close, if they want a high close, then they're going to have to keep pushing it. So three things: float rotation, which is volume, right? No dilution. Company can't increase the supply. We push. It's just supply outweighing demand. Bam, bam, bam. I think my last sell was in the 7s. I don't remember, 7s or 8s or somewhere in here. And so I missed this, but I caught from here up to here. That's good. You can't ever catch the top or the bottom. I actually was long, hoping they would push here. As soon as this wicked, you guys see that? It wicked right above. See how it broke the high and then came back down? I was out. And we said, floor's about to wash. And there it was. Then I put on Twitter, where's the next short? I said at VWAP. There it was, and you shorted. And now in after hours, you're getting another push. So that's just a float rotation. And if I need to do another training on dilution, I can. I mean, it's just I can just whip through it real quick. You've got the shelf registration, which is an S3. That's just a normal offering. We're offering X amount of shares for X amount of dollars. All an S3 is it's on the shelf. They can use it multiple times. They don't have to keep going back to the SEC, but it has to have an effect. If it doesn't have an effect, they can't use it. Again, baby shelf, always check the baby shelf to make sure that they can offer. This training was done on May 29th about the baby shelf. An ATM, they're usually not that big of a deal, but sometimes they can be. Like Genus had, I think, 60 million or something. It was it was 11 million at 60 cents while the stock was at 11. And so, yeah, I shorted on that because we knew that was just going to flood into the market, right? So the ATM, it looks like that at the market offering. And that's just giving you free money. Is the company using ATM? You can see it on the tape. Why volume is so important. I just talked to you about it. If there's only, 10 million, if there's only, let's just pretend that the SSPI had 5 million in warrants. Do you think that that's going to matter with 350 million volume? Not really. So warrants, and variable converts. That's the most dilutive one. It's a downward spiral with them. But that's it. And watch the other training that I did to get a deeper dive into what these are. Private placements is another form of dilution, but honestly, they actually turn out to be pretty good a lot of the times if you get a good price on them. So anyway, just wanted to go over that with you real quick. And let's see, stop the recording. Go. All right. In stream.